A company that most people have heard of is Hewlett Packard. You've probably bought one of their products at some point. They're probably best known now for being a computer company providing laptops, desktops, providing peripherals to those computers. They also really grew their business with the printer business, which is not as high growth as it used to be at one point. Overall, this is a technology company, but it's a slow growth company. It's been around for a long time. I've been an investor in Hewlett Packard, and they announced their earnings last week. It was received well by investors, and the stock did go up. I wanted to take a look at their financials and update my analysis on the company to see if I want to buy more shares, hold, or sell my shares in Hewlett Packard. This company is a $34.87 billion company, and their revenue is up at around $53 billion if you look at the trailing 12 months. They are profitable and they have a solid earnings per share. Their PE is 12.69 in the current year, and next year it's expected to be 10.12 if you look at the earnings per share for next year compared to their stock price. They have a nice dividend at 3%, and analysts like the company, but they say it's fairly priced. If I compare Hewlett Packard to the S&P, they've followed the S&P quite well and actually just slightly outperformed it over the last 5 years. HP has almost doubled in value in 5 years, which is good. That's what I'm looking for in stocks, where they can double in value over 5 years. And you can see that their price has been somewhat flat for the last couple of years, although the last year has been a good one, where they've appreciated well and returned a nice dividend. Looking at their financial statements in the most recently closed quarter, they're showing growth, which is very good. If they start growing, a lot of good things happen for this stock. They had seen negative quarters for a little while, and that's because during the COVID years, the stock really, or I should say, the company sold a lot of gear, and it was a lot of customers bought forward, and they didn't need PCs for a while. But now they're beginning to refresh their PCs, and they want new equipment, so HP is seeing higher sales. That's a good thing. Balance sheet's really solid. They have a good cash balance, and they don't have a whole lot of debt, less than 3 times EBITDA. Their cash flows are actually doing better than I expected. I'm expecting cash flows to be last year's number plus a growth rate. They're actually performing higher than my expectations. So that's good. They're growing their cash flows a little faster than expected. That's always good. I'll use cash flows as one of the principal ways to value Hewlett Packard. When we look at the forecast that analysts have put together, 10 analysts cover the stock and they provide an opinion. And in general, they say it's fairly priced. They give it a low PE, which is fine because it's not a high growth company. They have a earnings per share in the current year of $3.49, and it's going to grow modestly over the next couple of years. I'll use that data in my valuation as well. So what do I think Hewlett Packard is worth? Well, I'm going to value the company by looking at the net present value of all their cash flows that I expect. I'm going to put together a cash forecast, then discount that forecast to today's value. I'm also going to look at earnings per share, try to get to a value per share using that method. Let's start with the cash flows. So last year's cash flow is going to be my starting point. I'm going to grow it by 6%, which amounts to $3.1 billion. Then grow it modestly by 6%. The company is operating better than that, but I'll be conservative. And I'll grow cash flows in the first 4 years by 6%. And then in terminal value, grow by about 4%. So it gives me a cash forecast for the first 4 years as well as all cash flows beyond year 4. I'm going to discount those cash flows by 9% and get to an intrinsic value, a net present value of all those cash flows of $62 billion. I'm going to add cash on the balance sheet and take away debt to get to an equity value of $54.1 billion. The market cap of the company currently is $34.87 billion. They have been buying back shares, so it's made each share a little more valuable. And when I look at the overall per share price versus per share value, I get to a 56% discount on Hewlett Packard if we look at cash flows. Now, if we look at earnings per share, $3.49, I'm going to use a 12 since they're going to start growing. I think the market will recognize that. A very modest growth rate of 4% gives me a per share value of $43.56. The current market price is $36.09, so there's a 21% discount. Now, I treat the cash flow method as the principal valuation method. 2/3 of my value comes from there, 1/3 from earnings per share. So the blended discount is 44%. That's a really nice discount on a very well-known company that pays a 3% dividend. How desirable is the Hewlett Packard business to me? Well, let's take a look. Now, their technology is appreciated by customers, but they don't have any strong patents or a technology that everybody has to have that they only have. Therefore, I'm going to put them as a moderately desirable company. It is a very good company, a trusted brand. It's a household name, but they don't have any like really strong barriers of entry to keep their competitors out and enable them to grow, to have lots of profits, and lots of cash flow. This is a very well operated company. If they continue to do so, they will be moderately desirable to me. I have to be careful with companies like these. I want a nice discount, which Hewlett Packard offers. In the current market environment where stock prices are really high, I have a pretty good investment in this company. So I'm going to hold for the month of September. September is a month where we usually see pretty strong pullbacks. And if I see a pullback on Hewlett Packard, I'm going to be buying shares of this stock. I'm not recommending you buy, hold, or sell Hewlett Packard. I'm just sharing my experience, my journey as an investor. That's all I'm doing here. Good luck with your investments. My investment in Hewlett Packard has been going well. I have about $36,813 invested in the company, and my stock is worth $45,163. So I'm sitting on a 23% gain in a little over a year. So that's good. That's a good return, and they've paid a nice dividend, provided income. So I'm glad I'm a stockholder. And as mentioned, I will be buying more shares if we have a pullback in September. I have a feeling we're going to have a strong pullback. So I just want to pump the brakes on buying too many shares early in the month. I'm probably going to wait till late in the month or maybe wait until October before I really buy into companies. So I appreciate you watching. I hope you found it interesting. And I wish you the best of luck in investing in 2024.